Picture this: a city skyline that once symbolized power, permanence, and prestige, and a door quietly closing behind it. No press conference, no farewell tour, just one final decision that tells you everything you need to know about where the future is headed. Because when someone who built empires in the cold certainty of tradition decides to plant their flag somewhere new, it's never about weather or convenience. It's about leverage. It's about momentum. It's about seeing what most people realize far too late. This isn't a real estate story. This is a signal. A signal that the center of gravity is shifting. A signal that capital follows confidence, not comfort. And a signal that when the smartest players move, they don't ask for permission. They move quietly, decisively, and all at once. Tonight, we're not talking about what was sold. We're talking about what was chosen. And once you understand why this move happened, you'll never look at power, location, or long-term strategy the same way again. When people look at a property sale, they often see a headline or a price tag. What they don't see is the discipline behind the decision. For me, this moment represents the completion of a transition that began years ago, guided by strategy rather than sentiment. Chicago was never just a place I lived. It was a base where ideas were tested, risks were taken, and institutions were built. But leadership demands the ability to recognize when an era has run its course and when the future requires a different foundation. The sale of my final Chicago residence is not a sudden move. It is the last step in a carefully sequenced plan that started when I chose to relocate my primary operations and personal base to Florida. Once that decision was made, everything else followed logically. You don't straddle two worlds when clarity matters. You align your assets, your time, and your energy with where you are going, not where you have been. Real estate, like capital, should serve purpose. Holding onto property simply because it carries history is not how enduring organizations are built. Over time, each Chicago property was evaluated with a clear lens. Does this asset still support the direction of my life and my work? When the answer became no, the decision was straightforward. Some sales made headlines because they challenged assumptions about value or timing, but those assumptions missed the point. Value is not just about maximizing a number on paper. It's about optimizing for focus, flexibility, and long-term opportunity. Completing this exit from Chicago real estate signals something larger. It reflects a commitment to fully invest, mentally and materially, in the place that now offers the strongest alignment with growth, innovation, and stability. Florida has become more than a destination. It is a platform for building, for attracting talent, for shaping an environment where ambition is met with momentum rather than friction. There is also an important lesson here for anyone watching from the outside. Strategic transitions are rarely emotional, and they are almost never impulsive. They are executed step by step, often quietly, until one day the picture becomes clear to everyone else. By the time the final asset changes hands, the real move has already been made. This moment is not about leaving something behind in disappointment or frustration. It is about closing a chapter with respect and moving forward with intent. Cities, like businesses, evolve. So do people. The responsibility of leadership is to stay ahead of that curve, to anticipate where the next decade will reward commitment, and to act decisively before consensus forms. With this sale, the transition is complete. The focus is undivided, and the future, built on clarity, conviction, and long-term vision, has already begun. A real estate portfolio is not a collection of trophies. It is a living reflection of how you think about capital, risk, and direction. Every asset you hold should answer a simple question. Does this still serve the future you are building? If it doesn't, then holding on becomes a distraction, not a strategy. That principle guided every adjustment I made over the past several years, especially when it came to properties tied to a chapter of life that was already evolving. As priorities shift, so must the structure supporting them. When the center of gravity of my professional and personal life moved, it became essential to realign my investments accordingly. This wasn't about abandoning value, it was about redefining it. Luxury properties can carry prestige, history, and emotional weight, but those qualities alone do not justify inertia. Capital that sits in the wrong place, even in beautiful surroundings, loses its edge. Each decision to sell was deliberate. Market conditions were analyzed, timing was weighed, and outcomes were measured not just in terms of price, but in terms of what that capital could do next. In some cases, the final numbers surprised observers. They saw comparisons to past purchase prices and drew conclusions that missed the broader context. Markets change, cities change. What matters is not whether every transaction fits a simplistic narrative of profit, but whether the portfolio as a whole is positioned for durability and growth. Streamlining a real estate footprint creates something far more valuable than headlines: clarity. It frees attention. It unlocks flexibility. It allows resources to flow toward opportunities that align with long-term conviction rather than short-term optics. By narrowing focus, you strengthen execution. By letting go of what no longer fits, you make room for what comes next. There is also discipline in knowing when not to wait. Holding out for a perfect moment is often a way of avoiding a necessary decision. I've learned that decisive action, even in imperfect conditions, often outperforms hesitation in ideal ones. Adjusting a portfolio is not about predicting every fluctuation. It's about understanding your destination and ensuring your assets are pointed in that direction. What these adjustments ultimately represent is confidence. Confidence in a strategy, confidence in a chosen path, and confidence that capital redeployed with intent will create more value than capital preserved out of habit. This approach applies far beyond real estate. It applies to businesses, careers, and leadership itself. At the highest levels, success is less about accumulation and more about alignment. When your investments, your time, and your vision all point in the same direction, momentum follows naturally. Reshaping a portfolio is not an admission that something failed. It is a declaration that you are thinking ahead. The lesson is simple but demanding. Be ruthless about purpose. Keep what serves it. Release what doesn't. And trust that clarity, paired with conviction, is one of the most powerful assets you can hold. Every major decision in life comes down to one fundamental question: where will your efforts compound most effectively over time? Geography is not neutral. It shapes talent flows, regulatory realities, cultural energy, and the speed at which ideas turn into execution. When I evaluated where to build the next chapter, the answer became increasingly clear. Not because of one single factor, but because of how several forces converge in the same direction. The move was never about comfort or climate alone. It was about positioning. In today's world, the most competitive environments are those that reward innovation, respect risk-taking, and understand that growth requires flexibility. I wanted to be in a place where ambition is met with cooperation rather than constraint, where institutions are built forward instead of managed backward. That environment matters more than nostalgia, and it matters more than tradition for tradition's sake. Florida represents momentum. It is attracting capital, talent, and entrepreneurs at a pace that is difficult to ignore. When people with options choose the same destination independently, that is not coincidence, it is signal. Businesses follow people, and opportunity follows businesses. The ecosystem reinforces itself, and once that cycle starts, it accelerates. I wanted to be part of that acceleration, not watching it from a distance. There is also a deeper strategic layer that often goes unspoken. Stability matters. Predictability matters. When you are making decisions that span decades rather than quarters, you look for environments that offer consistency in policy, clarity in governance, and respect for enterprise. That stability allows leaders to focus on building instead of defending. It creates space for long-term thinking, which is increasingly rare and increasingly valuable. Relocation at this scale is not symbolic, it is operational. It affects how teams collaborate, how partners engage, and how quickly decisions move from concept to action. Being fully present in the right place sharpens judgment. It improves execution. It sends a clear signal to everyone involved about where the future is being built. But let me be precise. Choosing a new base does not mean rejecting the past. It means acknowledging that success requires evolution. The world does not stand still, and neither can those who intend to shape it. The courage to move, physically, strategically, intellectually, is often the dividing line between those who preserve what they built and those who expand it. For anyone listening, this is not about copying a location. It's about copying a mindset. Ask yourself where your time, energy, and resources will work hardest for you in the years ahead. Ask whether your current environment amplifies your ambition or quietly taxes it. Those answers may be uncomfortable, but they are essential. In the end, the move was about alignment, aligning values with environment, aligning strategy with opportunity, aligning today's decisions with tomorrow's objectives. When that alignment is achieved, progress becomes less of a struggle and more of a natural outcome. And that ultimately is how enduring success is built. Large-scale investment is never about a single transaction. It's about building conviction in a place and then acting on it with patience and scale. When you decide where to commit significant capital, you are making a statement about the future you believe in. You are saying very clearly that this is where growth will outpace risk, where institutions will strengthen rather than erode, and where long-term value can be created deliberately instead of defensively. What drew my focus was not short-term excitement, but the breadth of opportunity. Residential development, commercial infrastructure, and the evolution of entire districts are interconnected. When those pieces move together, they create something far more powerful than isolated investments. The goal is not to own assets. The goal is to help shape an ecosystem where people want to live, work, and build for decades. Committing capital at this level requires more than optimism. It requires confidence in governance, confidence in talent pipelines, and confidence that tomorrow's rules will not punish today's decisions. That kind of confidence is earned through observation and experience. Over time, it became evident that this environment encourages builders. It welcomes ambition. It understands that when enterprise grows, communities grow alongside it. Real estate, when approached correctly, is not static. It is a platform for influence and responsibility. Where offices rise, jobs follow. Where communities are thoughtfully developed, culture takes root. Capital deployed with intention can accelerate that process. It can raise standards, attract global talent, and set the tone for what excellence looks like in a region. At the same time, serious investment carries a parallel obligation to give back. Prosperity that doesn't translate into broader benefit is fragile. That's why meaningful commitments extend beyond balance sheets. Supporting education, healthcare innovation, and cultural institutions is not separate from business strategy. It is part of it. Strong communities create strong markets. The relationship is reciprocal, and ignoring that reality is a mistake. What's important to understand is that this approach is long-term by design. There is no rush to extract value. The objective is to compound it. That requires patience, resilience, and a willingness to invest through cycles rather than react to them. Markets will fluctuate, narratives will shift, but foundational belief in a region's trajectory provides stability amid that noise. For leaders and investors watching, the lesson is not about geography, it's about commitment. When you believe in a place, you show up fully. You invest not just money, but attention, relationships, and time. You take responsibility for outcomes, both economic and social. This is how enduring influence is built, by choosing a future, committing to it decisively, and working every day to ensure that growth benefits more than just the balance sheet. When capital and conviction move together, they don't just follow opportunity, they create it. Legacy is not something you declare. It's something that forms quietly through consistent choices over time. It is shaped less by what you accumulate and more by what you build, support, and leave stronger than you found it. As success grows, so does responsibility. The question is no longer how much value you can create, but how broadly and durably that value is shared. True impact extends beyond markets and balance sheets. It shows up in classrooms where curiosity is encouraged, in hospitals where innovation saves lives, and in cultural institutions that preserve creativity for future generations. These are not side projects or afterthoughts. They are foundational investments in the environments that make long-term success possible in the first place. When you establish roots in a new place, commitment must go deeper than physical presence. It requires understanding the needs of the community and responding with action, not symbolism. Strategic philanthropy is about precision and scale, directing resources where they can unlock opportunity, elevate standards, and create self-sustaining progress. Done correctly, it doesn't replace public effort, it strengthens it. Education has always been central to that vision. Knowledge is the ultimate compounding asset, and access to it should not be limited by circumstance. Supporting institutions that expand research, nurture talent, and challenge conventional thinking is one of the most effective ways to influence the future. The same principle applies to healthcare innovation, where breakthroughs depend on long-term funding and the courage to invest before outcomes are guaranteed. But giving is not only about institutions, it's about culture. Communities thrive when excellence is celebrated, when ambition is encouraged, and when people believe their efforts matter. Investment, financial and otherwise, can help create that atmosphere. It can attract leaders, inspire confidence, and set expectations for what is possible. What often gets misunderstood is that this approach is not detached from business. It is aligned with it. Strong communities create resilient markets. Healthy institutions foster stable growth. When people feel invested in their environment, they contribute more fully to it. This alignment between civic strength and economic success is not accidental, it is strategic. Looking forward, the measure of success will not be headlines or numbers frozen in time. It will be the durability of the systems built and the opportunities created for those who follow. That requires patience, humility, and a willingness to think beyond immediate recognition. For anyone listening, the takeaway is simple but demanding. Aim higher than personal achievement. Build in ways that outlast you. Invest in people and institutions with the same rigor you apply to markets. Because in the end, the most meaningful returns are not financial. They are the ones that shape the future long after individual decisions fade from memory. So when the lights fade on one skyline and rise on another, don't mistake it for an ending. This is how real power moves, without noise, without hesitation, without looking back. Not chasing headlines, not explaining itself, but positioning quietly where the next decade will be written. Because the biggest decisions are never made in public. They're made in moments of clarity, when vision outruns attachment and convicti. Outweighs comfort. What looks like a property sale is, in reality, a line drawn in the future. And history has a habit of rewarding those who move before the crowd understands. Why? The question isn't why this happened. The real question is, who's paying attention and who's already too late?